What if a company's biggest step forward actually started with them taking a step back? It sounds a little strange, right? But that's exactly the story behind Transformers and Rectifiers India, or TARIL. They're signaling a massive shift in momentum and have laid out some seriously ambitious plans for the future. Let's get into it.
The company's own CEO, Satyan Mangura, really set the stage with this quote. He's not just saying, hey, we had a good quarter. He's calling it an inflection point. Now, in the business world, that's a huge statement. It means this isn't just a temporary blip on the radar, it's a fundamental change in where the company is headed. So what's giving him all this confidence?
All right, so here's how we're going to break it all down. First, we'll look at why this is such a big turning point for TARIL. Then, we're going to dive into those impressive Q3 results. After that, we'll check out their three-part strategy for dominating the market, their wild goal of hitting $1 billion in revenue, and finally, we'll wrap up with the key things you need to know. Okay, first things first, the turning point. Now, the really fascinating part here is that this huge leap forward came right after a very deliberate, very strategic slowdown. I know, it sounds completely backward, but for TARIL, it was all part of a bigger plan to build a much stronger foundation for all the growth that was coming. See, for the first half of the year, the company intentionally pumped the brakes on taking new orders. The goal wasn't to get smaller, but to make sure they didn't get overwhelmed. They wanted to keep their order book manageable, aiming for an 18 to 24-month execution time. This wasn't a sign of weakness at all. It was all about discipline, making sure they could actually deliver on their promises without getting tangled up in delays.
So, the big question is, did that bold strategy of slowing down to speed up actually work? Well, let's jump into the hard numbers. This is where we really get to see why the CEO is calling this an inflection point. First up, let's talk revenue. Standalone revenue hit a whopping 704 crore rupees. That's a huge jump, and it really signals that the company's growth is shifting into a higher gear. This wasn't just luck. It came from executing better, using their plants more efficiently, and turning more projects into reality.
And it's not just about selling more, they're making more money on what they sell. The EBITDA margin grew to over 16%. This tells us they're getting more profitable, not just from sales, but because they're operating smarter and taking on more high-margin orders. They're getting more bang for their buck.
And when you look at the bottom line, it tells the same story. A solid 71 crore rupees in profit after tax. This is pretty clear proof that their disciplined approach to growth is really starting to pay off big time.
Now, this slide right here really shows you the confidence they have. Just look at how this fantastic quarter lines up with their goals for the whole year. They're not just hoping to hit their targets, they are well on their way. This quarter wasn't some lucky break. It feels like this is their new normal.
Okay, so the numbers look great, and the discipline clearly worked. But how do you keep that going? How do you turn one amazing quarter into years of success? Well, that brings us to their three-pillar strategy for dominance. We're talking tech, we're talking integration, and we're talking expansion.
Let's break that down a bit. First, a huge technological win. They landed the very first high-voltage direct current, or HVDC, repair order in India. HVDC is super important for moving power over long distances, so winning this is a massive stamp of approval on their engineering skills. Second, they're taking control of their own supply chain with 6 new facilities, and third, they're just building more. A huge production boost to meet all this crazy demand.
And this whole supply chain thing, it's absolutely critical. Just look at the timeline. By making their own key parts, things like special conductors, press boards, and bushings, they're basically building a fortress around their production. This means they're less reliant on outside suppliers and can protect their profits from crazy price swings. It's all about building a company that's ready for anything.
And just look at the raw scale of this expansion. They're going from a capacity of around 40,000 MVA to almost 75,000 MVA. They're nearly doubling their manufacturing power. That is a massive bet on the future, and it shows you just how confident they are that the market is going to keep growing and that they can grab a much bigger piece of it.
So you take all of this, the discipline, the tech upgrades, that fortress-like supply chain, the massive expansion, and it's all leading to one very ambitious goal. Let's talk about their plan to become a billion-dollar company and what it's going to take to pull that off.
And there it is, the big headline number. The company is aiming for $1 billion in revenue. That's about 8,000 crore rupees by the 2028-29 financial year. I mean, just to put that into perspective, that's more than 3 times what they expect to make this year.
It's a huge, audacious goal that tells you everything you need to know about their level of ambition.
This chart really drives that point home. To go from about 2,600 crores this year to 8,000 crores in just a few years, well, that requires them to grow by nearly 48% every single year. That is a staggering number, and it makes you wonder, how in the world are they planning to do that?
Well, they're betting on 4 key things. First, just growing their main transformer business. But also, they'll start making money selling some of those in-house parts to other companies. They're also riding a huge wave of demand, with a whole Indian transformer market growing at a steady 15% a year. And they're looking at brand new markets, like green hydrogen and EV infrastructure, which are just poised to explode.
So, what we have here is a story of incredible performance and an even bigger vision for the future. But, like with any plan this ambitious, there are always risks. So let's try to boil this all down into a balanced view, looking at both the massive opportunities and the very real challenges they have ahead of them.
On one side, the reasons to be optimistic are crystal clear. You've got amazing results, a solid strategy, a booming market, and that bold long-term vision. But the risks are just as real. Actually pulling off these huge expansions on time and on budget is a major challenge. Key materials, like specialized steel and bushings, can have wild price swings. And they have to do all of this while keeping their profits healthy and making sure they don't take on too many orders too quickly, repeating mistakes from the past.
And all of that really leaves us with the billion-dollar question, doesn't it? TARIL is building a bigger, stronger, more self-reliant company. They've got the plan, the market is on their side, and you can't question their ambition. But the path from one great quarter to becoming a global leader is full of challenges. Can they actually execute on this incredible vision? That is the story we're all going to be watching.